I am Vincent Cerny, and you're getting ready to preview and look at part 2 of a Cerny Success Show. The word success is the success of our guest or the topic to help you in the audience reach a higher level of satisfaction. If you want to bring me in to speak to your group as a motivational speaker, my email address is cernysuccess@aol.com, or call me at 321-544-1500. And we're back to the Cerny Success Show on Bright House Networks. I'm your host, Vincent Cerny. My guest is Mr. Al Thomas, the expert financial stocks and bonds gentleman who's been with us now. This is show number 3 or show number 4?
I think it's 4.
Over the years, and we talked about your book. If it doesn't go up, don't buy it. It's in its 3rd printing. Al's added extra chapters for those of you that have gotten it. You can get it through Amazon.com. Read the comments on Amazon.com, or you can read chapter 1 on Al's website, mutualfundmagic.com. Al's telephone number in the 321 area is 453-5300. Al, one of the other areas I want to talk about is gold. Everybody talks about gold. It's up. Now we're in January of 2011. It's gone back a little, but it's still on an upward movement in the 200-day moving average. What is your feeling about gold, and what should people be doing about gold?
Well, I've been bullish on gold. My second book that came out in 2003, I said gold is the only bull market for the next 10 years.
Well, now you're an excellent predictor. If we would show the number 2 chart to our viewers, and while you're talking about gold.
Well, gold, I think, has still got a long way to go on the upside. Remember, gold is the only wealth protection you can have against inflation. Remember, it's the money that we have today is they're just printing more and more and more of it. Therefore, it takes more dollars to buy the same amount of gold. There's 3 ways to buy gold. You can buy gold coins, such as Canadian maple leafs, Krugerrands. There's a lot of, many countries strike gold coins. You can buy GLD, which is on the stock exchange, and that represents gold. And you can also buy futures, which I don't recommend at all.
All right. Now the chart up right now, Al, you can see you were right. Your prediction all through the last decade, gold has gone up. The red line is the Standard & Poor average.
Yeah, it's gone flat. It did nothing for.
Right, but gold just did magnificently well, and as
well, gold. When my book came out, when my book came out in 2003, gold was at $333. Today it's $1,300 and something.
Right, and it's been over 1,400.
It's been, it ticked over 1,400. It's got a minor correction going on right now. I think it'll come back, and my guess is it'll come back to about its 200-day moving average, which is about 1,250 or so. At that point, I'll be watching it, and I'll be able to tell if that's as far down as it's going to go. And if that's the case, I'm going to be adding even more to my portfolio. I think that gold is the only way you can protect yourself against long-term inflation.
Briefly, and I want to go into interest rates and bonds, but gold versus silver, what's your feeling there?
Well, silver has been way outperforming gold for the last several years, and you can buy silver coins, which are a very good investment, and they will do really well too. Now, if we get into hyperinflation, it's going to be hard to walk into to Publix or any of our stores with a gold coin that's worth several $1,000s and say, I need a can of beans, but we don't know what the can of beans is going to sell for. So we've got to be very careful there.
However, we're still the greatest country in the world.
Yeah, so But what you can buy is bags of what they call junk silver. It's dimes, quarters, half dollars, and dollars, and these are based on the price of silver. And I don't know what a bag of silver is worth today. I don't keep up with that.
It's on the internet, no problem.
Yeah, you can find it.
Well, one thing, and then we want to talk again about bonds and interest rates, but silver also has an industrial use.
Oh, yes.
Which is far more reaching than gold does. So that's another impetus, need for silver over and above the coin area.
Yeah, well, the silver gets used up.
That's right.
Whereas gold doesn't. There's probably 99% of the gold that's ever been mined is still above the surface and usable.
Right.
It doesn't go away.
All right. On our next discussion is on bonds
Yes.
and interest rates. If they would show the third chart on the board, please. And here we're looking at the interest rates is the red line, and the bond, is it bond return?
The bond price is...
Bond pricing.
Yeah.
Now, when interest rates go down, bond pricing goes up.
Well, it's actually the other way
The other way,
around.
I'm sorry. Go ahead, you explain.
Here it is. When bonds go down, interest rates go up. And for the last almost 20 years, there's a long-term chart, which doesn't show here, that interest rates have been slowly coming down. And now, it is my opinion that interest rates are going to have a long-term change of direction and headed up. I currently have a position long interest rates. In other words, you can separate. You can either be short the bonds or long the rates. It doesn't make any difference. The outcome is the same.
Right.
I'm long the rates, and I have a pretty good position in that, and I want to even add more to it. And I think we're going to see rates go considerably higher from here. We haven't seen all of the defaults in interest in bonds of any kind in this country and in Europe.
Right. Bonds are basically in a couple of areas. You got corporate bonds, you got treasuries, which are the
treasury bonds.
10-year treasuries.
United States Treasury bonds are considered the safest of all bonds, and this is when we pay our debts. So when we borrow money, for example, from China, they buy our bonds, which is the same thing as they're lending us money, because now we owe them for the face of that bond, and we now owe them almost $1 trillion. Don't ask me what $1 trillion is. No, I don't know. Nobody knows what $1 trillion is because it's beyond counting. Everybody talks about it today as if they know what it means. All I can tell you is we're not going to be able to pay it back.
All right. So what do you see interest rates then doing over the year 2011?
Oh, I think interest rates will slowly climb for the rest of this year.
All right. How do you see that in relation to the real estate market?
This chart that we had on the screen there is a chart of the 10-year Treasury note. And this is what sets the rates for your mortgages. Okay. So we're going to see the mortgage rates going to go up, which is certainly not going to help the housing. And I personally think that housing rates, housing prices are probably going to decline another 20%. Now, don't shoot the messenger, please, but that's my opinion, and I've been saying this before they broke. In fact, 2 years ago, I started telling my subscribers to my newsletter not to buy municipal bonds, and they've been crashing lately. You have to know how to buy them, and unless you have an exceptionally good bond broker, don't fool with bonds. I don't personally buy bonds at all, but I buy the interest rates because I think bonds are going down.
All right, well, one advantage of municipal bonds is you don't pay tax
Well,
on them, but
I
still.
don't pay any attention to that.
Oh, but still, I know Barney over the last 2-3 months has been really emphasizing the fact that a lot of municipalities are in red ink as far as...
I've been saying that for a long time. I've been telling people, I started last year telling people, get out of your municipal bonds. They're in bad shape, and they're going to get worse because as the housing, remember, where do the municipalities get their money?
From
real estate.
Real estate.
And if real estate continues to go down, which is, I think it will, and I may be wrong, but if it continues to go down, the counties, the municipalities are going to collect less money. And what that means also is they're going to have to raise their millage rates for their taxes on real estate, and people don't like that.
No, they're going to get squeezed.
And there's going to be more foreclosures, not less.
All right, Al, it's January of 2011. What do you see the stock market doing this year? And where should Joe Sixpack or the corporate executive put their investment?
Well, no one knows where the market's going. Right now, it's been in a very steep run-up, and I think it's at this particular time, I think it's a very dangerous time to be buying any kind of equity. The people are, the supposed mavens on Wall Street are saying,
right,
buy the emerging markets.
Where should our viewers invest?
Right now, cash is king. If you don't know what to buy, don't do anything. And that, brokers hate that. Remember, I'm going to tell you one thing. Cash is a position. You'll never hear that from your broker. But that's the safest place to do. And when you don't know what to do, don't do anything.
Right.
Can I say this?
And gold?
Gold is a safe, for the long term, I recommend that people buy some Krugerrands or Canadian Maple Leafs. Those are two that people recognize. Buy those, put them away. They are wealth insurance.
Al Thomas, I know you've made this a most outstanding show again, as you always have. I want to thank you for coming back and
always my pleasure.
Being with our viewers. You've been watching the Cerny Success Show. I am your host, Vincent Cerny. If you like what you've seen, tell your friends. This will be rebroadcast again on the same cable network throughout the week. And until we meet again, throughout our travels, may we find more success at every crossroad from what we've learned from our guest, Al Thomas. Thank you all for participating in the Cerny Success Show. Thank you for watching the Cerny Success Show presentation. The crew and myself want to thank you. Our one thought in mind is to present something to help you reach a higher level of happiness and satisfaction. And if you want to bring me in to speak to your group anytime as a motivational speaker, my email address is cernysuccess@aol.com, or you can call me at 321-544-1500.